Welcome to The Real Recipe, the podcast that brings you the perfect blend of real estate trends and topics, where we serve up fresh insights and sizzling strategies. So let's get cooking.
We're back.
We're back. We're back with another episode finally. Some new digs.
This one.
Some nice
Long-
digs.
yeah.
I like it a
Nice
lot.
digs.
It's nice. It's nice.
Yeah.
All right,
But
today.
changing things up a little bit for the better.
Absolutely.
So today we're going to talk about
Hard money.
hard money,
Hard money.
private lending, hard money.
But more so for people.
Every time I say hard money, I always get like, it just sounds weird.
It does.
hard
It sounds
money.
more complicated
It sounds,
than it really is.
sounds violent, like
And shady.
yes,
What,
it
like-
does. It sounds like Vito and Vinny are going to show up and give you cash and
With a baseball bat.
maybe if you're not paying.
Oh, if you don't pay.
If you don't pay, yeah.
So
That may-
why, there's so many questions I have. What is hard money?
Also-
Why do I
so-
get hard money? Like,
There's. I mean, I guess hard money is pretty generic, and a lot of people use it as more of a catch-all.
Mhm.
Like it's, and I think for most people when they say hard money, it really revolves around the interest rate.
right.
More so than some of the other aspects of lending. And as hard money would insinuate, it's not exactly a competitive interest rate, but hard money is generally it's generally private money. Whether it's individuals who are lending their own money, whether it's hedge funds or private institutions who want to lend their own money, but they do so because there is certainly a void in lending for certain transactions. And if you have enough equity in your home or in a building, or you're purchasing, a building and you have enough, down payment, and there's other aspects of the transaction that make it difficult to get financing, hard money or private lending is certainly, one of the avenues that you can pursue to get it done. But generally speaking, it's just, private people willing to lend money, at pretty low LTVs, certainly get paid.
But why
a
are they
certain
why
interest
are
rate for that, so.
why are they more willing to lend money than, let's just say, a conventional lender? Like, why? Let's just say I'm doing a reno. Why not get a reno loan? Or why would I opt to go to a hard money lender as opposed to trying to go?
There are so many reasons why
Right.
you would gravitate towards a hard money or private lender. Try to give you some like examples of it. So, for example, like a lot of things that are happening now in today's lending environment. So, if you're buying a building and it's vacant,
Right.
you don't have any tenants in there. A lot of lenders are shying away from that right now. In years past, that would not have been a huge stumbling block.
Right.
A lot of lenders would have said, "Oh, okay, it's going to take you X number of months to rent. Your cash flow on the property is going to be X. We'll lend you,
Mhm.
Y, right?" And a pretty standard transaction. Now, because of all the chaos that's happening in commercial real estate and lending in general, a lot of lenders are saying, "Well, hold on, wait a minute. You may not be able to rent that out as quickly as you think you're going to be able to rent that out, and we don't want to necessarily be the ones holding the bag."
Right.
If you can't get this to perform. So, for example, like let's say you're buying a mixed use property, right, and it's completely vacant. The storefront, the storefront may take you months, if not years, to rent out. The apartments will probably take you, a pretty short amount of time to rent, but certainly a storefront is going to take a while. And some lenders will even take the approach of saying, "Well, we don't even care about the storefront. We just care about what are you going to be able to get on the residential side." And that impacts your loan to value or impacts your cash flow, which affects the loan that we'll be able to give you. So, there's a lot of different reasons why you would gravitate towards hard money, but there's some aspect of the transaction that warrants that type of move. So, for example, like the vacancy is a big one. Maybe there's issues with the property itself, right? There's maybe there's underground oil tanks, or maybe there's
Where they can't get a conventional loan.
Yeah, there's easements. There's all kinds of different things.
I mean, I feel like I see it more with a lot of my investors because they want to get in and out of deals in terms of being able to say sometimes, all cash.
Right, they're going in as cash.
They're going in as cash with the understanding that their hard money lender can turn the
Yep.
money around quicker.
Yep.
And it's a renovation, it's a build.
Totally.
It's a, you know, so I think for most people,
My hard money guys right now are the busiest they've been in 20 years.
I feel
I'm
like I'm
sure.
doing,
To the point where
A lot
I'm
of hard
actually
money,
now
yeah.
trying to put together a fund to try to
yeah.
bring in more money because I'm running out of money. Like, my hard money guy, guys has got $20 million. That's all he's got. Like, he doesn't have more. Now I
Right.
got to go find,
And it's,
I have to go find other.
it's all out on the
banks.
street right now.
Yeah, well, and the other thing too is, I know we're getting a little bit off topic, but the other aspect of this is when you do hard money, it's typically a hard money loan is a 50 LTV, maybe 60 LTV, depending on the transaction. I have some guys that will go to 65, but only in like cream puff type scenarios.
Right.
Good cash flow. Maybe there's something wrong with the borrower, whatever. But a lot of those transactions, the hard money guys, they're having to use some of their warehouse lines or some of their lending facilities that they haven't normally used. But a normal, that's kind of a normal hard money loan is maybe 50, 60 LTV. It's probably got, a 12, 13, maybe 14% interest rate. Several points, not
Right.
Not one, not two,
Not two.
several.
not one, not two.
Typically,
3.
It's anywhere from 3 to 5.
Right.
Usually is how
That's
that
what it-
plays out. And then there's the fees on top of that, which,
Right.
a lot of those fees go to, things like background checks on the individuals, background checks on the businesses, background, credit reports,
Preparation of
Attorney-
note
yeah,
and mortgage.
attorney's fee.
LexisNexis type
Right.
stuff, reports, things like that. Like, there's actually a lot that goes into it.
But there's a reason why you're going for hard money, and you understand that the fees are higher, and there's a reason for that.
Now, how does that work on the appraisal side? Because obviously these individuals, most of them are just going in as cash, and then we know on the back end they're getting a private loan. They're paying to prepare the note and mortgage, and we're signing that at closing.
Yep.
But is the hard money lender, are they doing their own appraisal? Because obviously they're making that calculated risk based on the property value. Are they doing their own appraisal, or they're just pulling comps and seeing?
The hard money thing is such an interesting world. Each individual or each lender is kind of unique to themselves. But a very standard, process is they'll use their own people.
Right.
They like to use their own appraisers, guys that they've known for years that they trust. They like to use their own title companies. They like to use their own attorneys.
Sure.
Like they have this sort of network that they
Well, because once you
they
do
trust. They don't want to deal. They don't want to go
Yes.
outside of that. And anytime,
well, because it works. Once you do it with the right attorney, the right title company, and the right team,
until it
it's
doesn't.
like, look, until it doesn't. But
Right.
for the most part, you have that team in place because it does work. The attorney has the documents. We draft them up. It's the same documents you use, whether it's a construction deal or it's a straight hard money deal.
Yeah.
But having the right title company, it's like, look, if you want the hard money, this is what you
Yeah.
need to do.
Yeah.
And if you want to get this deal done, then most investors are jumping on board. And then once you find a hard money guy, it's like, and a good hard money guy, and you're an investor, it's like you don't leave that person. Like, especially
Yeah,
if they're not killing you on the fees and they're not killing you on the interest rate, and it's and then the more you do, then the more inclined they are to work with you on
that's one of
fees.
the-
And
one
if
of
you're a
the big-
first time flipper,
Yeah.
you're gonna get killed.
One of the
most
biggest
likely.
questions that I get when I talk to hard money guys is, "Do you know this guy?"
Right.
That's
Right.
like almost the first. That's literally
Yeah.
in most conversations. That's the first question. Do you know this guy? How do you know this guy?
Well, I see it all the time, right? The more experienced investors who have a hard money guy, when I look at those deals in terms of what the bank is charging and interest rate and what they have to put up, what the LTV is, and then I get an investor who comes to me and it's like, oh, I'm using this company I Googled. They had good reviews.
God.
And it's like it's a company. It's not
It's
like
so
it's not a
bad.
private individual hard money
It's
lender.
so bad.
And you get to the closing and
Never
and
Google.
you
Never
Yeah.
Google hard money.
Yeah.
You're gonna get.
and you get and then you
will
get,
ripped
but then
off.
you get to the closing and you're like, this is why I tried to put you in touch with a few people,
Yeah.
because
Yeah.
you're look what you're getting charged at the closing. And part of it is, you're a first time investor, first time flipper, first time renovator, but even still there's other guys out there who will give you a little bit of a break here on this.
Yeah, hard money has just become more, a more mainstream product. In years past, a lot of people had this aversion to it simply because they just assume that hard money, they don't call it hard money for
Right.
nothing. There's a reason you're paying a significantly higher interest rate. But with hard money, I really don't care about cash flow. I don't care about the overall condition of the property. I do care about environmental issues and I do care about certain things, but the majority of the concerns that a normal lender would have, I wouldn't.
Right.
Hey, if I've got a 50 LTV loan on a property and the property's in good condition and my appraiser went out there and gave me an as-is value and I know that's the value of the property, I'm good. Like there really shouldn't be a concern for me beyond that. Now, your ability as an operator, your ability as a construction person, your ability as a flipper, I do have some concerns regarding that. However, they're minimal because my risk is limited because I have a 50 LTV. You could really
Of course.
mess up.
You're
I could still,
and you're
as
still
long as I get
okay.
my money back.
You
I'm
also
good.
have a mortgage. You're taking out the mortgage. You're taking out the property. You have the note, but you also have a lender's title insurance policy. I mean, we've done a few of these where some of the really good button up hard money lenders, like they have their own attorney, and a lot of times in those instances, we're not even doing settlement. They're having their title company or their attorney, do settlement instead of the title company, which is fine. We're just issuing searches and insurance, but. So I've seen some where they are really not seasoned in doing this and they're not requesting a lender's policy, which is so crazy to me because you are taking a bigger risk even if you have a 50% LTV and you have a mortgage. But why would you not make the borrower? You're making the borrower pay for everything else. Why would you not make them pay for
the one thing you do see, and I get to, because I act in more of a broker capacity now that I'm starting to lend more of my own money and doing other things now, but not predominantly I don't act in more of a broker capacity. I get to see a lot of these people and it's like a cast of characters. Like some guy, had a couple of buildings in Brooklyn and he sold them all and now he's got this pot of money and his buddy told him about lending cash and now he wants to lend the cash because his buddy's killing it lending cash and you try to have, to your point, you try to have some of these conversations with these guys about streamlining it and how to make it more efficient and more, make it easier on us and on him or them.
I mean, even some of the most experienced guys I deal with aren't 100% streamlined.
Totally buttoned up.
No, they have no servicing.
They're like
there's no servicing, by the way, which is absolutely hysterical. They literally call up people and be like, I think you owe me like $750 this month or $1,000 this month.
I mean, I have some funny stories, and
they're not getting a statement.
No,
it's not
SLS.
You're getting a text message to be like, hey, it's
man, it's the 5th of the month.
The loan's about to mature, and I just want to make sure you're gonna pay this off next month. And
so
how much did we get? How much did we get at closing? Did we get the points up front? And I'm like,
I'll send you a Venmo request.
I'm like, yes, we got paid. And I love them, but they're smart because they have me or they have the team in place to help streamline them as much as possible, to help have the documents in place, to help have the settlement in place, to help make sure they're getting paid and they're getting they're getting lenders policies because I'm not letting my hard money guy close on a deal without getting a policy. Like,
it's just one of those things where you and we've said it multiple times on this, which is who you work with matters.
Yeah.
And if you're in a situation where you're looking for hard money or you're in a situation where you have a transaction and it's dying because there's an issue with financing, hard money may actually be one of the options.
Right. It'll save the deal.
That are available to you. And I'll give you a great example. I just closed one on Friday. It was a flip, actually, a construction flip. She was buying a single family home up on Greenwood Lake.
Okay.
Up
like West Milford?
Yeah,
like
up that way, right? Beautiful, gorgeous house, by the way, on the lake, but it was just old. It hadn't been renovated in years, and it was just it needed a lot of love. It had a boathouse, like it was a cool property. I was like, oh, this is actually pretty cool. Like I could spend my summers up here.
Some nice houses up there. Yeah, absolutely.
Right? Beautiful. Like they had done like a concrete dock, like with
Ryan's
all,
like
nice
moving
stone.
in to
Yeah,
this
yeah,
house
yeah,
in his
yeah.
mind.
Anyway,
He's
did
already
Did
moved
you
in.
buy this house from her?
Yeah.
I'm confused. Or
Anyway,
did you help
so-
her lend?
He's got a Pinterest board
Yeah.
on it.
Yeah, right. Yeah, I've already, I talked to April already. We're good.
Yeah,
We got the
Yeah.
design
She's doing
down.
the design work. It's all done.
Yeah. So, but what was interesting is when we did the appraisal, there's not a lot of comparable sales for lakefront properties up on Greenwood Lake.
Mhm.
Very few.
Well, because
Funny enough, there actually was one like a couple doors down, but significantly lower
But
price.
Right.
but I feel like they don't sell a lot up there. Like
They don't.
You get
They
a property
don't.
up there,
Yeah,
you don't let it go. It's a good
Yeah,
spot.
so we sent it to a great credit borrower. Borrower's got experience. It should fit into a normal lending box.
Right.
Send it to the lender. Lender reviews the appraisal and gets almost to closing. And at the what is normal for a lot of lenders is they'll do like a QC towards the end.
Kind of go back through the file.
Right, and then that's
like,
when
please don't
everybody
do that.
throws up
Yeah.
all over the file.
It's like, oh, so and so missed this and that
Right.
2 months
And
ago.
there's a reason for it, but
Yeah.
in this particular case, the QC compliance person, flagged it for the comps because the comps were like 20 miles away on a
Yeah.
different lake,
Yeah.
which I can appreciate why you would red flag that, but it's a lakefront property.
It's tough in that area
It is
because
tough in that
it's so
area.
spread out. Also,
without understanding the area, you're immediately gonna go, oh, this is a problem. You can't.
And you're also out of the timing. You're not getting something for the last year.
Yeah.
That's
Right.
yeah.
So what wound
Or
up
6
happening
months, whatever it is.
the lender wound up just killing the deal because they didn't like it at all. They just didn't want to do it. And
Right
I'm
before
finding that
closing.
a lot right now with a lot of lenders. You're hearing about people doing weird things, and some lenders are doing certain things, and other lenders are not doing certain things. There's a lot of calamity
Mhm.
right now in this commercial space. But that's a situation where, hey, by the way, do you have any other properties? Well, funny enough, Ryan, yes, I do. Oh, you do? Do you have any mortgages on them? No, I don't. Well, how much is it worth? X number of dollars. Well, hold on, wait a minute. If I take that property
Oh, they're gonna cross
and
collateral.
this property,
Yeah.
and that's got a combined value of this,
We're
and
good.
you're trying to borrow this, okay, we'll just cross collateralize the other property and
All right.
done. And we wound up closing.
That's what that bank did? Or you had to bring
That's a hard money guy. Like,
right, he came in and
12%.
cross collateralized and
Yeah,
yeah.
came in, cross collateralized on the property.
See, that's the thing with the hard money lender. They can get a little more creative, think outside the box, and get the deal done.
right. And that's ultimately why people are gravitating towards hard money right now, because
Yeah.
a lot of lenders are really clamping down
Mhm.
and being very restrictive in their lending, whether it's banks, whether it's big mortgage aggregators. A lot of these firms are now starting to, narrow the box. More
They
so than
want
have
they
before.
want like, I mean, we talked about this on commercial ones, but they just want vanilla deals, like to a degree. Like
Well,
they don't want anything like too outside the box.
Yeah, I'm
Close
do-
to the-
I'm doing
close to
another-
being outside
I'm
the
doing
box.
another one right now, 11 unit mixed use. Also having to do hard money, and funny enough, the guy had another property that he could cross collateralize.
Yeah.
Cash flow is amazing, but you're seeing now where hard money is becoming more, or this private lending is becoming more mainstream. Yes, it's an aggressive interest rate. I can appreciate that.
But it's a short- but
a
it's
lot
a-
of my guys are old school in that they typically just stay at 12%.
Mhm.
I have some guys that'll do 10, but they want very specific types of deals,
Right.
and then I have other guys that'll do 13, 14, 15%,
Yeah.
and kind of runs a pretty wide range of asset classes and property types that they'll finance. And, just depending upon the actual scenario itself will kind of determine like, oh, I can go here or go here or go here with it. And
Right.
that's why, again, like who you work with really does matter, because if you're working with like a regular, I even see some commercial guys who can't even get deals done, which is just absolutely hysterical, because you'd think that some of these guys who actually do commercial, they would have some of these relationships, and they don't.
Mhm. Yep.
And so me being a broker and having a lot of those brokered relationships allows me to really sit down with a client, talk to them, and go, okay, here's your scenario. This is kind of how it's going to get done.
Right.
We'll try this way, but I'm telling you, you're going to wind up here. And then they're like, and then when you have to tell them you have to go there, it's almost like you've almost blunted that blow to them, by giving them the heads up or having the
Right.
experience to be able to talk to them about it. But hard money does serve a purpose. It's not for everybody. Some clients don't want to do it. Some clients don't have the cash to do it either.
Well, that's
So that's
why,
what- okay. Yeah, go
Yeah, so
ahead.
I was gonna say, for people who are just wanting to get into it too, it's like, wow, that sounds wonderful. But if you don't have an exit strategy for when that loan
Right.
term is ending,
So like,
it could
That's
be.
another
let's
question
just say-
I do
Is
ask
someone speaking to
what's-
them about
what's
us?
going to happen at the end here? That's
So,
a
Right.
question
so let's
that-
just
that gets
say
asked at-
real
with
quick, just to
clients.
like kind of give it a nice overview for someone who has no idea what hard money is. If they are, let's just say, an investor going
Mhm.
into their first flip, and it's $300,000 purchase, probably gonna have to put in, let's say,
Small.
let's stay small here, okay? Let's say $300,000.
Easy numbers.
Easy numbers, nothing crazy. First flip ever. You're buying a
Okay.
$300,000 condo,
Yeah.
townhouse, 50, 60 in. What type of hard money are you looking at? Standard, right? You come to you first. How much do I need to put down? What are the terms? When do I have to pay you back? How do I pay you? Am I paying you one balloon payment with all the interest at the end? Am I paying you on a monthly basis? Like, how's that work? Because I think that's what most people just need to
Yeah,
understand.
like,
And I know it
it-
varies, but I'm just saying,
it
just
does.
in its simplest form, I think, just to give people an idea.
Hard money, comes into play when you have a transaction that doesn't fit into a box. And what does that mean? Well, either you don't have the experience as an operator or as a flipper or something that requires experience to do
Right.
it. Okay,
Mhm.
that would be one reason. You don't have the credit.
Mm-hmm.
That's a big
Right.
reason right now. The property doesn't cash flow the way that you think it's going to cash flow. Another huge reason.
You bought the property in an entity. You're not going to do an investment loan. You're going to go get a hard money loan.
Yeah, or
Yeah,
the property has some deficiency in some way that prevents financing from occurring. Those are typically the main reasons why you would gravitate towards hard money. But again, a standard hard money deal is probably 50 or 60, 40 or 50% down payment
Right.
or equity. Probably a 12%, and that's kind of middle of the range, but 12% interest rate, a couple of points easily. Close in probably, I could close in some of these deals. I can close in tomorrow or Monday.
Right.
It just
Right.
depends on, how quickly we can
Right.
get some of these things done.
Title
But
and
I
a
do
couple other
need,
things.
there are things that I do need. I do need title.
Title.
I do need
Yeah,
an
it's still a
appraisal.
standard transaction. You still need to make
Yeah,
sure everything
like,
gets in. Yeah.
So, it's sort of hysterical when you see people say, "Oh, I can close deals in 2 or 3 days or 4 days."
You can
not
have the
really.
money. You can have the money available in 2 to 3 days.
Right, I have the money now.
But-
Like I could give you the money
Right.
right,
But
now.
if you
but
can
don't
have it
what I need.
available now, it is realistic to close next week.
But I mean, I
it's
could.
realistic
totally.
to close
I could
next week.
have a deal under contract today, put a title order in, have title probably by mid next week, and close by Friday.
Yeah, I can get if it's a single family house, a multi,
Have-
two,
you
four
know-
family, I can get an appraisal done in a day or two.
Right.
Mm-hmm.
Exactly.
If it's a commercial property where you need a commercial narrative appraisal, that's going to take you 2 or 3 weeks.
What are my fees? Let's just say on like a $300,000 loan, approximately with a hard money lender
You're,
up front.
That's tough to pin down.
But like ballpark could be,
you're paying multiple.
if you're paying a couple points, so it could be
I would tell you
depending
that
on the loan,
that
you're up at like
transaction, you're
7, 8
probably-
grand right there.
Yeah, you're probably somewhere between 10 and 20 grand
Right.
in fees.
Right.
And you have to remember that even though that sounds like it's a lot, and it is, I'll be the first one to admit that it's a costly loan, but you have to remember, I don't care about your income. I don't care about your credit. I don't care about your ability to repay. I don't care about, 50 different disclosures about all this other nonsense about,
Right.
your right to pick your own attorney and your right for your own,
Yeah,
you get
yeah.
your own insurance and like all these things. I don't care about any of that. I just care about the as-is value of the property and your ability to get what is needed to get done.
Yeah. And I think
the
just for most people, you have to understand when you do get into the loan, it is a short-term loan, most likely 12 months.
Yeah.
And that's
That's the other
Balloon-
thing we haven't
balloon
talked
payment,
about.
yeah.
It's typically a 12-month term.
right.
I can go to 18 months, but it's typically a 12-month term. And what
And are your guys requiring you to make monthly payments or
interest only.
interest only monthly payments?
Yeah.
Yep.
But to kind of circle back to what we started with, a lot of the challenge right now for a lot of these hard money guys is people aren't paying off. They're actually extending their loans, and then they have to pay extension fees. But they're extending because when they go back out to get regular conventional financing,
They can't.
They can't get it. Yeah.
because either the cash flow still is,
And that's for guys who are buying and holding and need to pay the loan off, as opposed to a flipper who's going to flip it and pay the loan off.
Yeah, or even
in
just
6
like,
months.
I actually just had this happen where a bank wanted a client to open up a deposit relationship or checking savings account, and the client was like, "I'm not doing that. Like, that's ridiculous."
Yeah.
I feel like I see a lot of banks want to do that. Bigger, the bigger
they're
banks.
doing that because
yeah.
there's some
They
issues
need-
going on underneath the surface.
Yeah, they need the deposits. They need the money.
Yeah, you're good. There, not this is a conversation for another podcast, but there is definitely a banking thing going on right now.
Yeah.
Nobody wants to talk about it.
Ryan
Everybody
can't
wants
wait to talk about it.
Oh my
Every
God,
week he
because
wants
It'd
to
be
talk.
like an hour,
Yes,
an
he wants
hour
to
long
talk about
episode.
it.
I deal with it every day. And,
We just had this
it's
conversation the other
frustrating
day.
to deal with it. Like it's almost like sometimes when I talk to clients and I hear the scenario, I almost tell them immediately, "Yeah, that's a hard money loan." There's not. I'm not even.
Yeah.
I'm not
Let's
even
not
going
let
to
it-
attempt. To
let's
tell
not
you,
talk about
well,
this.
but I only want to put down 25%, and I want a great interest rate. Man, no, that's not going to happen.
Everybody wants that.
You could try that, and then you're going to be back to me in 2 or 3 months, and
Yeah.
Because you
and
can't
you
get
just
it.
wasted
It's not gonna work.
2 to 3 months.
Yeah,
That's the
and-
other thing too, is to me, like, to kind of like wrap this all up, I think the biggest piece of the hard money is, you pay a little bit, but it's also about timing for me if I'm an investor.
It's not even timing.
I mean, it is timing.
It's not timing. It's
For me as an investor, yes, it is.
it's getting a deal done. That's what it is.
Well, yeah, but
that's what I mean by timing.
related to
That's what I mean by
timing.
timing.
Okay.
You know, like,
Yeah.
it gets me in and out of contract faster because I'm coming in as cash, right? Knowing if I'm dealing with, it's not my first investment. If I'm dealing with my hard money guy, I know that it's cash on hand. We're gonna get in and out. Minimal due diligence depending on what I'm trying to do with the property, oil tank sweep, things like that. But it is timing in terms of getting
Yeah.
a deal done.
You get your deal done, and you
Yeah.
get in and out quick.
Because if you're flipping, you want to be in and out of that. You want to be in and out of that deal in a couple months. You don't want to be sitting there, under contract.
Yeah,
you
there's
just want to
some-
get
there's-
it done in
there's-
30 days, 15 days.
There's definitely pros and cons to it.
Yeah.
I can appreciate
There's
that.
pros and cons to everything.
I know, but people, you want to get your deal done, and you got some issues going on. Hard money may be an option for you.
So if you need hard money, who should you call?
This guy.
The guy with the sweatshirt.
The guy with the sweatshirt. Just follow him on Instagram, TikTok,
I don't do TikTok. Oh my god, I don't do
Tumblr?
Who does TikTok? Anyone? Somebody does TikTok.
Facebook,
Although I probably should
Vine?
use TikTok.
Vine.
Yeah.
I miss
Oh my
Vine.
God,
Miss Vine.
It's like Vine is like what, like
So-
2015.
TikTok. It's TikTok. It's TikTok. So
Oh, God, who does that? I don't even know.
so yeah, call Ryan.
MySpace.
Call Ryan if you need hard money.
Yeah, if you have a scenario, certainly, give me a ring. We can run through it. And that's one of the biggest challenges for this. Just on a side note, is just the structure.
Yeah.
A lot of investors, a lot of newer investors struggle with structuring their financing, and they don't understand how to do it correctly. And there's a lot of people that think that they know, and put out a lot of really bad advice, or just advice that has a lot of pitfalls in it.
Yeah.
And if you don't have the right person behind you, that's why, the beauty of my relationships right now is people literally they call me up and go, "Ryan, I need $700,000 on this property." Okay. Like it's literally
Right.
at that point now where
I just sent Ryan
they
a deal.
don't even question it. They're just, "I need $700,000 for this."
Well, I just forwarded Ryan a deal, and the guy was like, "I need X amount to like bridge this over," and Ryan's like, he's like, "No, I'll give him the whole thing, and we'll just refi him out, and we can do it that way. Let's just get that done."
Right. But there's an example of, you that was going on since December.
Yeah.
Right.
Who you work with matters.
Oh my
It does.
gosh.
And,
Yeah.
and it's so
It
silly.
does. It does. It
It
does.
does.
There's like
It
a
does.
quota for
So,
how many times we
yeah.
need to say that.
5, 4, 3, 6,
Yeah. So
10.
all right.
All
Well,
right.
it's a good one. It's another good one.
Yes. Hard money. It's not as bad as everybody makes it out to be.
No, it doesn't sting the ears as it wants
It's
to.
a lot more. It's a
Yes.
lot more. It can be a lot more gentle and loving.
Yeah. So, if you have any more questions, reach
Maybe
out to that guy.
All right.
Till next
Till
time.
next time.
Till next time.